Eric Mwathe for the weekend of August 30th and August 31st, 2014. Let's take a look at how we ended on Friday. We can see here that the Dow was unchanged, up 0.11%. Nasdaq was up 0.5%. S&P 500 was up 0.33%. Gold was down. Crude oil was up 1.5%. And the VIX was unchanged. Let's take a look at market action for the week. And we see that for the week, S&P 500 closing at all-time weekly closing highs. And it is second week of a breakout follow-through, and it was up 0.75%. Take a look at the Dow for the week, was up 0.57%. And take a look at the Nasdaq, which was up 0.92%. Now, after the conclusion of today's market, I noticed something and I want to share that with you. There's something interesting. And if you take a look at the S&P 500, 2003 for the first time. Now keep that number in mind. But before we do that, check this out. If you add these numbers here, you get 15. And 1 plus 5 equals 6. You add these numbers here, it's another 15. 1 plus 5 is 6. And then of course this here adds to 6. So those are the numbers. But keep in mind the 2003 because I want to show you something very interesting. Check this out. This is a S&P 500 weekly chart between March of 2007 and 2009. The lowest weekly close was here, which happened to be March 6th. So March 6th of 2009. And what's interesting is that if you calculate the days between March 06, 2009 and this week's closing, it's exactly 2003 days. Very interesting. So let's take a look at the charts, but before we do that, consider the following video that I made earlier today. Eric Mwathe with another Rethink video. This time we are going to be taking a look at some odd observation that I've always observed in the market for a couple of years. And I want to show you that there's a lot that needs to be done in terms of technical analysis. Let's not assume that we have discovered all there is to discover about how to use the technical analysis, because I think there's so much that needs to be discovered, and somebody out there is going to be always coming up with new ways of looking at the market. Let me show you some odd observation. It's really intriguing, at least in my opinion. What I'm going to do is I'm going to draw a straight line, and the line is going to be right there. In fact, let me increase the thickness here. Alright, so you see this line. Now this line connects the lows, as you can see, and this is a monthly chart for a stock, SIGM. I could have picked any stock, but this is going from 1990 all the way to the current market here, August 2014. And so it's connecting all the lows on the monthly RSI, all these lows. How this happens, I don't know. But at some point in 2008, the stock broke below that level there and came down. And the same line becomes resistance now. In fact, it came close to that line here, which was a high. It hit the same line precisely on that line that was previously support over a period of about 13 years or so. And now it's becoming resistance, which is this level here. Very interesting. But what I found really curious is if I take the same line and just copy that, so it's the same line, and I put it, adjust it slightly, what's interesting is it gives me, this is uniform activity above the line and back below it, so that means that it's a reversal, which is that major high. Uniform activity above the line and back below it, So that's a high. You can see the same thing here. So if you go backwards, it gives you all the highs. Double top there on the same line. Uniform activity above the line, back below it. That's a major high. So interesting is that this is parallel. These two lines here are parallel to each other and they make sense. In fact, it's interesting that if I take the same line, now another parallel line, you see it makes a high. The same line gives a high here on the monthly RSI and that high. Both of those highs were significant because the stock would drop from here all the way to here and also from here all the way to the current lows lately. So interesting that the same line is doing the same thing. Now to make things even more interesting, I'm going to take the same line, copy it, and bring it now to the current chart, which is here. The same line, and it gives you this low and this low and this low here. How that happens, I don't know. It's really interesting to me. Now I'm going to take the same line, copy it again, just so that we can see how, or just move this line here and take note of this. So it was support here, and now it's become resistance recently here at that high, there at that high. So interesting here, you can see with the end of the month coming up in August of 2014, if next month it rolls over like that, that becomes a high. On the other hand, if it breaks out, then that becomes a change, because what has been resistance, which is this line here, could now become a buy signal. Hope that is not too confusing. All I'm trying to say is that it's interesting to me that these lines that seemingly make no sense make a lot of sense when you look at them from the point of drawing parallel lines. So how that works really is very interesting. So let me take two lines off. I want to show you something here. It seems to me like, and I've noticed this, and it's something I'm still doing research on, it seems like stocks have a channel, not only as far as the price is concerned, but sometimes even as far as the RSI is concerned. And this is going back many years. This period here is lasting a lot of years, from 93, 92, all the way to 2008. It's only after it broke below the channel here that it hasn't done well. And so it seems like this was the channel that the stock had to stay in, this channel here, in the period when it was doing at least okay. Once it broke down here, the same line became resistance. So it became resistance here. The same channel became resistance. So what I'm saying is, in the future, at some point, if it ever came back to the extension of the same line and found resistance, let's say something like that, then that means it's a major high, short term. So interesting how that works. Now you might think this is just one off thing. I want to show you three other charts that seem to indicate that there's something about the way the stocks behave that is consistent over a period of many years. You might be familiar with this chart. It is for the Nasdaq monthly, going back from, so it's the Nasdaq monthly chart going back from 1980 all the way to the current chart of August 2014. I want to draw one simple line, and there you have it. This simple line seems to show us, if you go back, it gave us the low, for example, the lows of the crash of 1987. It gave us the low in 1990-91, which is here during the Gulf War, and it also had a double bottom support during the dot-com crash of 2002, 2001, 2000. And again, it gave us the low in the market in 2009. How can the same line do that over such a long period of time? Now let me show you another one. But before I do, remember, we call this bottom here March 09. You can check out my video on YouTube that I made on March 6th, 2009, just the weekend before the market made a low of March 9th. So this is one of the reasons why I thought the market was going to move higher, based on the fact that I was seeing that the RSI had come back to the previous support level that has been established over a period of so many years. Now what we have in front of us is the Dow Jones monthly, going back again from 1980 to the current chart, which is August 2014. I'm going to draw another line. And so there you have the line. Now I have to note that this here doesn't look right, because the Dow has been trading longer than 1980. So I assume the software here is calculating the RSI going off the 1980 price level. So I'm taking that off and drawing the line that makes sense, and you can see that it connects also to the drop in 1987, lows of 1990, 91. It hits the lows during these lows here in 2000, and you can see that once we went below and then back above that line with uniform activity, the buy point is somewhere here in March or April of 2009. So that makes a lot of sense that that line continues or was very productive in 2009. So let's go to the S&P 500. So this is the S&P 500 monthly chart from 1980 all the way to 2014 August. And so let's draw the line. And so here we have the line, and it too seems to give the lows of 87, late 1991. After we recaptured that level there, happens to be the perfect entry level in 2003. And also once we recaptured this level here, after uniform activity below the line and back above it, that was this period here about March, April of 2009. So that makes a lot of sense that the line seems to be consistent with predicting major lows in the market going back to 1980. So I want to draw one more line. And the line that I've drawn is a red line. Before I do that, let me remove the blue line so as not to confuse us. And you can see that the red line connects the lows of 82, 83, 87, 90, 91, 92 time period, lows of 95, the lows of 98, and it is only after we broke down here in 2000 that we had the dot-com bubble bust here. The same line, when you extend it, it is only after we broke down below the line here, which happens to be late 2007, before this move lower, which was the crash of 2008. So guess what? So we are now bumping heads with the same line here. The indication here could be that we are looking at a market that could be looking at a major high, based on the fact that this line has been very consistent, and the fact that now this seems to be like resistance along the same red line. Now let me point out something that is important here, is that the market seems like it doesn't drop. It does not drop until such a period as to when there is a major break along a major established RSI lows line. So there was a major break of this lows line here. That was a major break of an established line, and that's why we had this movement from here to here. There was another break of a multi-year trend line on the monthly RSI here, which coincided with a break here in late 2007 to the lows of 2009. And so we can assume that the next major bear market is not going to begin until we break this trend line connecting the lows in 09, the lows here 2011. And so if we break below this, then that's when the market should have a serious bear market. Okay, let's take a look at the charts now, and we begin by taking a look at the Nasdaq weekly. This is week number 2 after breaking out above the previous weekly closing high of 4485.93. So this is a very strong market. I am still wondering whether this market is really going to have a strong upside for a couple of reasons. Going into the new week, let's pay some attention to this number here on the RSI at 69.19. If it can go and drop below 69.10, it could lead to some serious or some type of a pullback. Not necessarily serious, let me take that back, but some type of pullback, just because when you move above 69.10 you have momentum, and when you give back that area you can pull back. So I'm watching for that. There's also some type of a trend line on the RSI. If you draw the top of the highs in March and then the highs beginning of July, you can see that the market is contending with those highs right there. So it would make sense if we pull back. Also, there's some type of resistance that I have been expecting ever since we broke this trend line here. So we draw a straight line there, and so it would make sense if the market turns around and gives us something like that, which would be some type of a double top on the weekly RSI. And I'm almost leaning to that. Of course, if the market can continue pushing above 69.10, then momentum is obvious to the upside. But if we give back and trace below that level, maybe a pullback takes place. But it's a very strong market here. I mean, this is strong, and we are all wondering whether the market wants to take back, or at least wants to peg, the 2000 highs. As you can see on a monthly chart, we are very close to the monthly closing high of February 2000, very close to that. So that's, I think it's very achievable. And also 5300 is not impossible. So maybe that's where the market is going. You know, that can be done. I think most of us realistically never ever thought the market would ever go back to those highs of 2000. It just seemed impossible, but here we are. So let's just keep that in mind, that the market could want to tag those highs before we see a serious pullback. Let's go back to the Nasdaq daily. And the daily does look strong. As you can see, maybe the one thing that could happen here is we might get negative divergence on the RSI. But as of right now, I don't see anything bearish on the daily. Momentum is still to the upside unless we get a pullback that confirms negative divergence. The MACDs are both. The main MACD is above zero, so momentum continues being to the upside. Let's take a look at the 30-minute chart for the Nasdaq, and we can see on the 30-minute chart we can see some type of early negative divergence. We've been making incremental highs here on the 30-minute chart, and yet the RSI continues making lower lows. So that could be some type of resistance on the 30-minute chart, and also back test of this line after the break here. This is now also looking like resistance. So it would make sense if we pull back from here on a 30-minute time frame. Let's go to the Dow on a weekly chart. As you can see here, the Dow did not close above the previous weekly closing high of 17,100.18. It did not close above that. It needs to be above that if it's going to confirm breakout, like the Nasdaq and the S&P 500. Also, seems to me like there's some type of resistance on the top of the weekly RSI line here. This could be a reversal area, something we have to watch going into the new week, new month. That could be a problem unless the market can break above that. Take a look at the Dow daily. You can see confirmation of resistance. There is a slight intention here to break out that seems to be failing, intraday highs, but yet the technicals continue making lower lows as of the close of this week. Also, you can see that there's also back test of this line, which was a previous break here, which was this break before the market had this move back to the 200-day moving average. So this is now being back tested here. A failure here could confirm that on a daily chart we are ready for a pullback. A quick look at the Dow's 30-minute chart, we can see short-term support on the lows, which is okay. Also the line that was a breakout on the way up. So if you draw the line here, this breakout above the previous short-term highs on the 30-minute chart RSI, so the entry level was there. Extend the same line, you can see that it's been support on multiple occasions here during these short-term lows, here during these short-term lows, and recently over the last couple of hours or the day or so here, which is these lows here. That's one view. The other view is if you try and find the ideal entry level on the breakout recently of these lows here is, let me take that off. In fact, if we take a look at a cleaner look at a Dow 30-minute chart, you can see support. Still, what I was talking about was this breakout here, which corresponds with this nice entry here off the lows recently. Draw a straight line from there. Should look like that, and you can see that we've touched the line twice here during these lows, perfect entry point, and also recently double bottom on the same line, which is over the last couple of trading hours. So maybe the Dow wants to move higher. We'll see what happens. And also on the 30-minute chart, the 2 MACD settings are just about to move back above zero. So momentum could actually be to the upside. We'll see how the new month is going to begin though. Now let's take a look at the transports on the weekly, and you can see they failed to hold above the previous weekly closing high of 8428.15. Also, depending on how the next couple of weeks are going to be, we might see a negative divergence, slight one here because of a slight higher high here. That could be a problem. If you take a look at the daily for the transports, you can see that seems to be some type of resistance on the top side of the daily RSI. Also, we were expecting resistance at this level, which has been resistance recently, and so those two lines there could be the reason why it's beginning to stall. So we need to watch this. It's not breaking out to new highs just like the S&P 500 and the Nasdaq are doing, so maybe this is leadership on the way down. If we take a look at the S&P 500 weekly, we can see yes, we are breaking out and holding above 1985.44, which is the previous weekly closing high, which is good. Now the one thing I wanted to point out here on the weekly is if you take the highs of the weekly RSI and draw a straight line connecting the highs, roughly somewhere there, you can see that it is possible that this could be where around here where it stalls. So we have to watch that. Also happens to be on the line that we've been watching for a couple of weeks, couple of months. If it stalls here, I would expect a sizable correction over the next couple of weeks. Maybe, just maybe even a major high. Take a look at the S&P 500 daily. And the reason why I say that is because here we're making incremental highs in the price, but you can see that the RSI has not really moved that much higher, and also it is at the level where it broke recently. So there was a break here, and so draw a straight line, and that's exactly where it's trading. So it will not surprise me that this becomes resistance. Of course, we have to wait for that to happen, otherwise all that is just speculation. Let's take a look at the Canadian market, and you can see that also it is working on week number 2 of a breakout. As long as it's holding above that line, it should be good. As long as the RSI is holding above 69.10, the momentum should be to the upside in the Canadian market. Take a look at the monthly, and you can see that ever since we moved above 69.10 here sometime in March, which is somewhere here, the market has taken off. And so as long as it holds above that level, expect momentum to be to the upside. On the daily, there is some type of short-term negative divergence developing right now as we've been making higher highs here. The RSI keeps making lower lows, so that could be a problem for right now, but the weeklies and the monthlies continue looking very strong. In fact, let's take a look at the monthly chart back to the Nasdaq here, and I wanted to share with you the level to watch. This former monthly closing high, price of 4408.18. So as long as the Nasdaq is holding above that previous monthly closing high, expect the Nasdaq to be moving higher as long as it's holding above that. So that's the level to watch. Anything below that, maybe the market is stalling as we go into the new month. Let's take a look at the Dow on the monthly, and to me this is level we have to watch coming into the new month of September. The Dow closed slightly above 69.10. If it moves back below 69.10 in the coming month or so, it could lead to a significant pullback. Why do I say that? The last two times it moved below 69.10 was here, which was for this drop beginning of this year in January, and another move below 69.10, which was for this drop here. So we have to be careful here. Anything back below 69.10 could be momentum changing to the downside. The Dow is also breaking on a monthly chart above the previous monthly closing high. In the monthly closing high previously on the Dow was at 16,826.60. So watch that level. Above that, the market is okay. Below that, the market could be breaking down. Let's take a look at the S&P 500, and you can see here also holding above the previous monthly closing high. Price was at 1960.23. That monthly closing high there. So holding above that is good. And also take a look at how the market has done well since March of 2013, when the market moved above 69.10. It's basically stayed above that since then, and that's why we've seen this nice acceleration. So for the market to go down, first and foremost, we have to see this move below 69.10. As long as it stays above that, the market should continue doing good. Actually, if we take a look at Apple, you'll see that it is also pushing the monthly RSI above 69.10 and continues to press higher. Previously, our buy point watch level was here about just under 92, about 91 and change. It's been holding above that. You can see that RSI continues doing well, holding above 69.10. If you take a look at the weekly, you'll see that the most recent breakout was here, 97.49, which was a previous weekly closing high about 3 weeks ago. It continues holding above that. RSI continues holding above that. So the stock is doing well because the technicals right now look very strong.